So for the computers, the rate is also 25%. And their softwares. So the first thing that we see is the Oracle database. They have mentioned that they bought this one, Oracle database at this amount. Then there was this computer-aided design. And then I had seen the cost of computers. Yes, these ones is what I was looking for. Okay. So we start with Oracle database 1125. Now that one we can't pick, we have to write manually. So Oracle database, there is computer aided design. Then there is this one we can pick. This one we can pick the way it is. Yeah, they are just those three. Then we have the total. So let's bring the amount for the Oracle. That one we cannot copy. So it is just 1125. Even the design we can't copy. We have to do it manually. But for this one, we can pick it. We can pick it from wherever it is. This one. So let's make them to be identical that way. So this now will be equal to this times this. Then you press F4 so that that rate will remain. Then you drag up to that point. Then you quickly come here and say the residual will be this minus this. Then you autofill. Look for the total is this plus this plus this. Copy. Okay. So I think we are okay with that. The next one is furniture and fittings. Furniture and fittings. Allowance. So I copy these ones. So this one is furniture. Fittings. Where am I copying? Oh yeah, sure, it is there. Then we bring the rates. The rate for furniture is what percent?
10%.
10%, good. So you make it 10%. Okay, so the first item that we can see is furniture and fittings. Let's go look for it. Whether in our question, you can see it. There is this one. furniture and fittings. So we copy, come and bring it here. Then there is these libraries zinafuatana hapa. So why is not copying? Okay, we don't have anything else for the furniture. So we just go straight to the total. The qualifying amount. This one is, this one, you put it there. Then this is equals to the library fixtures. You enter. Sasa, we come here. We say is equals to this times this F4. Enter, then you copy quickly there. You come here, you say equals this one minus this. Enter. You copy. Total here is this plus this. Then you get it like that. And now hii maneno, you come and double the rule. Then the whole of this column, we can make it bold. I mean, that through. The last thing is, let me put it here, other machinery allowance, so that it's not overlapped by the watermark there. Other machinery allowance. Other machinery allowance. So I come and copy here. So here we have machinery. We have the rate. Other machinery allowance, the rate is what?
$10.
Good. 10%, so 0.1. So where do I indicate percent? Is here. So if that is where I make it 10%, then the other machinery that tumebakisha ni huyu mtu anaitwa tuk-tuk. So tuk-tuk for the messenger there. So the qualifying amount is this one. If I said is equal to, okay. Yeah, 450. So this will be equal to this times this. I'm not putting a 4 because it's just 1. Equals this minus this one. So if you want it to look like the others, no harm, you can bring the total, which is just equals to this. No, there we are not.
Mwalimu,
Yes.
where are we classifying the conveyor belt, lift, and the special shafts?
We put them as part of the machinery for the investments.
What? Oh.
Yeah.
Oh, yes. Okay.
Then. Yeah, anything else you have forgotten?
Yes. If we were putting them under machinery, then we didn't put the
special shaft.
Yes. And even the lifts.
And
We
even the
didn't put
lifts,
them. And yes.
We did not put them. Okay, they are supposed to be part of that. Yep, supposed to be part of that. So let me finish this. We go back and rectify that. So I was saying this is equals to. So these two. So we should have put them here under this machinery here. So if we got two of them, so we can add two, we can insert two lines. Okay, so this one, where are they? There is this one. So I think I've picked this one first. Special shafts for lifts. Yeah. Then the next one that I need to pick is this one, lifts. Just copy. Wow. Okay. So my formula. So this one should be equals to palm. Close the brackets. Are we now okay with that?
Yes.
Good. So I think now we are done with that question. We are done with that question, not unless there is any concern. I think we have picked everything. So if we have picked everything, then that's fine. That's how you are supposed to present your question. Then the examiner will pick the figures as you have given them. Good. I don't know whether we still have time. Do we have time to do another one? What do you think?
I think we do. Let's hear what Lynn says.
Lynn, what do you think?
We still have time.
Okay, good. So we can attempt another one. Tuone tutafikisha wapi. This one of August. This one of August. You can see my screen, eh? If you can see it, read for us that question. But don't read the figures.
Okay, question 25. Wakili, Safari, and Filamu trade as Wasafi Enterprise. The following is a summary of the statement of profit and loss for the business for the year ended 31st December 2022. We have incomes, expenses, then there's additional information. Number one, investment income is made up of interest on bank deposits, dividends from investment in listed company, then there is interest charged on partners' drawings. Then note.
Oh, sorry.
It's okay. Then note, interest charged on drawings, Wakili shillings 1 million, and Safari and Filamu. Other incomes include gain on sale of all furniture and equipment. Then there is insurance compensation for cash lost. Number 3, there is administration expense, which includes rent, billboard advertisement, and general expenses. Then legal fees include 3 million paid for Safari in a private legal case. Trade expenses include repairs to buildings, VAT, subscription to a trade association. Capital allowance for the year ended 31st December, agreed with the tax authorities, amounted to 9.6 million. Partners' salary and interest on capital are given as follows. Number 8, other expenses comprise the following: motor vehicle maintenance, donation to wazee wa Banado, and debt collection fees. Number 9, the partners share profit and loss in the ratio 2:1 for Wakili, Safari, and Filamu respectively. Required, compute the tax payable by each partner for the year ended 31st December 2022. Assume that the business income is the only source of income.
Okay, thank you. That's good. It's good. So we can make that presentation. We can either bring it huku chini ama nipange. Let me pangle it here. Let me put it here. That is Wasafi Enterprises. Adjusted profit. For tax purpose. And we are using our shillings in thousands. Okay. So we can first of all design it. Number one, we will, for the interest of time, number one, we will have the accounting profit. Number two, we will, then from there, we will say add. The things that we are going to, to add, we shall pick them. We will have a billboard advertisements. Then we have the legal fees. Then we will have VAT. Then we will have depreciation. Then we will have partners. Salaries, they should be added back. Then we have interest on salaries or partner salaries. Partners' salaries. Then we have donations to wazee wa Banado. Then you see less the items that should not have been included in that. One of them is the investment income. Investment income is not part of the normal business. Gain on sale, furniture. Gain on sale of furniture. Then capital allowances. Capital allowances. Then we have compensation. Compensation for loss of cash. That's not part of our normal operations. So with that now, we will have the taxable taxable income. Good. That's how I prefer my workings. I prefer, first of all, having the frame. I don't think I've taught anyone of you previously. You may not know that style. Prefer having the frame first. Good. So tell me the accounting profit. The accounting profit is how much?
$189,740.
Good. So we can put it in column N, so that we will allow some 2 columns. So it is this amount here. Yeah, that way. Then for the items that we are going to add, the first one is billboard. So let's go looking for that amount where it is given. These are the expenses. So we will come to the billboard is here for administration. This one, 5,000. The next one is legal fee. It has been mentioned somewhere. Let's look for it. This 3 million here, it is not part of the business expenses. And because this one we cannot pick, it a bit we type manually, 3,000. Then we make it to have commas. Then we have the VAT. This one is not part of the trading expenses. So I should have said equals this one there. You enter. Then we have depreciation. Depreciation, where is it computed? Depreciation. Yes, it's part of this one here. It's not part of the additional information. This one. So we will say equals. Yeah. Then we have the partner salaries. It's explained here. So that one we'll have to pick direct. This one. We have the interest on partner salaries. We also have to pick it direct here. Those are not part of the operations. Then donations towards there is also not part of our normal expenses. So these donations to wazee wa Bernardo, the amount should be there. So I want to add these amounts here, bring them here, equals sum of all these up to that point, close the brackets, enter. Higher. Then we raise those items that were recognized as incomes, but they should not have been recognized as income. So this one, in the investment income, the whole of it, this one 9,000 should be brought there. Then gain on sale of furniture, this one, because they are not in the business on that. Capital allowances, these are a saving that was captured. So now this one where it is shown, the capital allowances, this one, we are not able to pick it. I can pick it. Let me see whether it is pickable from there. It appears like it is in a cell on its own. But sasa itakuja ikiwa na full amount, ikiwa na the three zeros. So let me just type manually and I make it this way. Then compensation for the cash that was lost. There is somewhere they were compensated. This one, that is not part of their normal incomes. So they are not in the business of losing cash and being compensated. So this one is equal to sum. So we are adding these three. You close the brackets, then you press enter. So this one then should be this amount plus this one minus this one. Yeah. Okay. So we are supposed now to share. So maybe this one we can double add the rule. And make it bold. Good. All right, let's distribute these amounts. Let's distribute these amounts. So this one will be allocated. Or let me just call it allocated. Allocated as follows. Allocated as follows. I have the ratio. The ratio, we are told the ratio was what? You require the ratio 2 to 1. 2 to 1. So you put 2, you put 2, you put 1. Then here you say equals to this plus this plus this. Equals. Okay. So I can have the partner. share of profits. Share of profit. Remember these things, you don't have to follow my format exactly. I'm only just trying to organize them so that we can show the working. So the first partner anaitwa nani? Naitwa Wakili, Safari, and Filamu. So I have Wakili, I have Safari, and I have Filamu. So how much will this one get? It will be equals to open the brackets. This amount here, divide by this, close the brackets, multiply by this ratio here. That's what you shall get. This one, we do the same. You can decide to copy the formula. You just do manually the way I'm doing. The last one is equal to, open the brackets, this, divide by this, close the brackets. Yeah. So total this one should be equal to this plus this. Okay. Yeah, so that is how the share will be. That is how the shares are. I hope we are getting that. We are getting that, sorry. So now from there we can compute the taxable profit, the taxable income, so we can talk of computation of taxable income. So we have the details. Trying to beat time. So the details, the items that we shall have, one is interest on capital. Now, interest on capital will be followed by interest on drawings. Interest on drawings. Then we will have salaries, or you could even have started with salaries, whichever. Then we have the profits. The profits. So that based on that now, we will have the taxable income. Okay, so we have the first one, anaitwa Wakili, followed by Safari, followed by Filamu. Okay, let's look for interest in capital, interest on capital, or we could have the total here ndio tujue the amount that we are sharing. Ama unaweza iweka tu hapa, either way, wherever you prefer, no harm. So for the interest in capital, it is mentioned somewhere. It is mentioned. Where was it mentioned? Interest. We have this, we have this. Somewhere it was mentioned. Yes, this one. Interest on capital, 16. So it is this amount equals, we are picking this one. So for Wakili, it is already divided for us. So tuna enter. For Safari, it is already done. For Firamu, it is already done. Yeah, good. Interest on drawings. Interest on drawings. Let's look for them. You're here. Interest charge on drawings. These amounts. Add these interest. These interest. First of all, this interest on capital, I should have put it as negative. Should have put it as negative. Equals to negative this amount. But this other one is coming as a positive. That way. But now we are already told out of this, huyu mtu anaitwa Safari, yeye alipata 800. Na huyu mwingine akapata 400. So if you do the hesabu, so here I'll put, let me start with Safari. Safari must have gotten 800. And this other guy got 400. So how do I get this one? It should be equal to this plus this. Oh. Sorry. I was saying this one should be equal to this plus this plus